Hello and welcome to Kitco Mining's Investment Trends with me, Paul Harris, in which we are taking a look at a gold development in Brazil. Joining me today is Alan Carter, CEO of Cabral Gold, which trades on the TSXV under the ticker CBR, and on the OTCQB in the US under the ticker CBGZF. Cabral Gold is exploring the Cuiú Cuiú gold project in the Tapajós gold province in Para, Brazil, and recently issued a pre-feasibility study for an open pit gold oxide heap leach project, which we will be digging into later on in our conversation. Alan, welcome to Kitco.
Yes, nice to be here. Thanks very much for having me on, Paul.
Excellent. Good to have you here. Let's start with the Tapajós Gold District in Brazil. What is it and why is it important, and what have you got there?
Yeah, the Tapajós Gold District or Gold Region in northern Brazil, in Pará State, Paul, is the site of the world's largest ever gold rush ever recorded in history. So from about 1978 to 1995, there was an estimated 1 million people that rushed to this small corner of Brazil, and they were washing placer gold from the streams. So that's gold that's been eroded into the streams and rivers of this region. The Mining Agency of Brazil estimates during that time there was 30 million ounces of placer gold recovered from a number of areas. Most of that gold, there's no primary sources. The vast majority of that gold, the primary sources have not been identified yet. So the primary gold deposits are still out there somewhere. We believe we've got an important one here. Cuiú Cuiú was the largest gold camp during that gold rush. So we're optimistic that it may have the largest primary gold deposit, but we shall see.
Okay. How did the company obtain the project? What's the history there?
We acquired it from a private company. There had been some work done on it previously by a company that I know very well called Magellan Minerals. That company was sold to Anfield Resources and now is part of the Equinox Gold Company. But this project was cut out prior to that transaction in 2016. And so Cabral acquired it in 2016. The company went public later that year, and we've been building on the early work that was done. So far we've found 3 gold deposits. We have four more discoveries that we need to fully evaluate, but we're quite confident that they will be deposits of some size. We don't know the size of these new discoveries yet, but we've been pulling some incredible drill holes. So we own it 100%. There's no debt on the company. And it's a very, very exciting gold project. The fact that it was the largest gold camp in the whole of this region, in the Tapajós region, I think makes it very, very intriguing.
Okay, so what are the deposits? You said you've got 3 deposits. The 2 main ones are about 5 kilometers apart, with indicated resources of 12.29 million tons, grading 1.14 grams per ton gold, containing about, let's say, 450,000 ounces in primary material. And there's also 13.56 million tons, grading 0.5 grams per ton gold for about 216,000 ounces in oxide material. I guess from your comments earlier about the number of targets, this sounds like it's just the start of what could be many more resources to come.
Yeah, it's a true district play, Paul. I think the important thing to note here also, before we get into what the various deposits are that we have, is we're right next door to G Mining's Tocantinzinho mine, which has just achieved production. It was built a year ago. It finished construction. It's currently the 3rd largest gold mine in Brazil. They expect to produce around 200,000 ounces this year. I was directly involved in the discovery of that project next to us. Cuiú Cuiú sits on the same geological structure as Tocantinzinho. The claims are immediately contiguous. In terms of the amount of placer gold that was produced during the gold rush times, Cuiú Cuiú actually produced an order of magnitude more gold than Tocantinzinho, placer gold that is. So 10 times more placer gold came out of Cuiú Cuiú than it did Tocantinzinho. And indeed, the golden soil anomaly that we have at Cuiú Cuiú is about 7 times larger than that at Tocantinzinho. We think those facts, plus several other features, suggest very strongly to us that Cuiú Cuiú will be a much larger gold deposit. But it's a little bit different to Tocantinzinho in that we have multiple deposits. So we have 2 main deposits, MG and Central, as you mentioned, and a small one called JB, and then 4 new discoveries. Now, the 2 main deposits are well over 1 million ounces combined currently. There's a lot of upside to those 2 deposits. We think they will grow. We've got 3 rigs turning right now. our objective is to grow the overall resource base, which is currently around about 1.2 million ounces. About a quarter of that is oxidized material, which we'll talk about in a moment, but or weathered material, if you like. But 1.2 million ounces, we're targeting in the next 12 to 18 months a doubling of that resource base. As I said, we have 3 rigs drilling. So it's a very exciting district to be part of. We've drilled some phenomenal holes in the last 12 months, including 11 meters at 33 grams, 12 meters at 27.7 grams, 5.5 meters at 26 grams. We've drilled some incredible results. So the focus for us now is really increasing that resource base as fast as we possibly can.
Okay. Well, thanks for the sort of potted history there, Alan. How did you get involved in the company?
I'm the founder, Paul. So I've been intrigued a very long time, for about 20 years, in where all this placer gold was coming in the Tapajós. So a big chunk of my career has been dedicated to running those things down. I think I really got excited when we made the discovery at Tocantinzinho. Myself and another geologist, Dennis Moore, identified Tocantinzinho before it had any drill holes, and that's now the 3rd largest gold mine in Brazil. So, given that Cuiú Cuiú has such a much greater footprint, as I said, in terms of the number of occurrences, size of the soil anomaly, the amount of placer gold that was produced here, I firmly believe that Cuiú Cuiú will be much larger than Tocantinzinho. So, it's a very unusual project. We've got 50 individual targets within this project or district that contain gold. And we've got, as I said, we've got some amazing drill rods. We've got boulder fields here, Paul, with boulders on surface that we don't know where they're coming from yet. But we've got about a dozen targets here where they're just big blocks of quartz material lying on surface. And some of these boulders, boulder fields, the boulders are averaging over 3 ounces a ton, 91 grams in one case, 75 grams average gold grade in another case. So that's enough to whet the appetite of most people in that I know that are working in our industry.
Now, given the proximity to Tocantinzinho, is that a sort of geological model that you're sort of following? Is that a good guide for you? Or, as you suggest, with so many targets, you've got something distinctively different from Tocantinzinho?
Well, as I said, it's similar in many ways. It sits on the same regional geological fault, and this fault zone is a very, very big fault, like a lot of the faults in places like Western Australia and Eastern Canada that control big gold deposits. So they both sit on the same geological structure. They're in the same host rocks. They have the same alteration type, so very, very similar. And because they have the same alteration, same style of mineralization, they have the same mineralogy. So the processing route here will be the same. The difference really at Cuiú Cuiú is there are just so many more targets that we have to test here. As I said, there are about 50 that we've identified so far. We're finding new targets all the time. It has a much larger historic footprint because there was so much more placer gold that was mined from the streams at Cuiú Cuiú, and it has a soil anomaly that's so much larger. So look, there's a lot of similarities, and we're right next door. And the fact, my hats off to the G Mining guys, Louis Pierre and his team. They built that mine on time and under budget. It was a $500 million capex. So congratulations to them. But the fact that we now have a massive new mine in the Tapajós suddenly shines a huge spotlight on this part of the world and this part of Brazil. So it's an exciting region to be involved in at the current time.
Now, Tocantinzinho, you mentioned that's going to produce up to 200,000 ounces a year. So I guess that sets a bar for you to aim at. Is your challenge in that context finding enough of these and defining resources at enough of these targets to hang together to be able to put together a mine plan that could potentially produce something similar?
Partly, I'd characterize it more of a question of prioritizing these various targets and bringing enough capital, money to bear on testing all these things. Look, I'm a firm believer that this resource is going to grow much, much larger, but we need to test a lot of targets. When Dennis and I first identified Tocantinzinho, we had one soil anomaly and one target, essentially. We've got 50 now to evaluate at Cuiú Cuiú. So there's a lot of work to be done here. So that's the big challenge for us.
How much have you raised and spent to get to this point in time, Alan? And how much do you think you'll need to continue the exploration efforts, to deliver what you're talking about?
Well, our strategy is a little bit different. Because the district is so large and because there are so many different targets here where we've got very high gold values, we're pursuing a two-stage development strategy or a two-stage plan for this project. Now, the top 50 or 60 meters, Paul, are weathered. They've been weathering over millions of years, so it's not rock anymore. It's mud and what we call saprolite, which is weathered rock, which is very soft. You don't need to drill and blast this material. You can dig it out. So our plan is to start by mining the weathered material. And as I said, of the 1.2 million ounces we currently have, there's about 300,000 ounces or so, which is in this weathered material. Now, what we want to do, what we're planning on doing is mining and processing that material first. Just that near surface material, the top 60 meters, which is weathered, because it's not rock anymore, because it's basically saprolite, mud and soil. Obviously, the processing costs and the mining costs are very, very low. So our objective is to get into cash flow on a relatively modest, only 3,000 tons a day to start with, and then use that cash once we're into production to actually drilling off all these various targets so that we're not diluting the capital structure going forward. We're self-funding and we should be making sort of post-tax in the first couple of years, at least at the current gold prices, about 50 million US a year. So, that goes a long way. You can get a lot of drilling done with 50 million US a year. So that's the plan. Once we've, got a lot of these targets tested with the drilling, being funded by the initial starter operation, once the hard rock resource has grown to a point, 2.5 million ounces plus, I think it'll get a lot larger than that, by the way, but once it's at 2.5 million ounces plus, and we're hoping to do that in the next 12 to 18 months, at that point, we'll then be scoping out a much larger stage 2 operation, which will be focused on mining the hard rock resources akin to what our neighbors are doing next door.
That brings us nicely to the July pre-feasibility study that you put out, where you talked about average production of 18,500 ounces per annum for 6.2 years, after-tax internal rate of return of 78%, 10-month payback, following a 37.7 million US capital expenditure, all-in sustaining cost of $1,210 per ounce. Some very good numbers there, Alan, very low capex. What's the plan from here in terms of being able to take that forward and so building that out so you can generate that sort of circa 50 million US a year in free cash flow?
Yeah, look, Paul, this initial stage 1 operation, we've scoped it and sized it so that it is something that we think is attainable. There are a lot of companies with big projects out there who've got feasibility studies and the market cap is made perhaps $100 million or $50 million and they need $500 million in terms of capex to build a project. A company that has only 100 million market cap has no chance of putting a financing package together for $500 million or 300 million. So we think that sort of initial size starter project is something that we should be able to fund. So our focus here for the next few months is to actually raise that 38 million US dollars or so to build stage 1 and get us into operation. We're just over $100 million market cap today. So raising $38 million is something that is eminently attainable, we think. So project financing is in full swing. We're building a development team in Brazil. We've hired a construction manager who's built several of these types of heap leach projects before in Brazil. We had Ausenco do the pre-feasibility study. The numbers are quite stunning for this little starter operation. As I said, it's only 3,000 tons a day, about 1 million tons a year. G Mining next door is doing 12,000 tons a day. So this is a lot smaller, but this should make a significant amount of money. In the first 2 years, we're doing an average of about 25,000 ounces a year. And as you said, the all-in sustaining cost is around about $1,200 an ounce. So as you know, gold today is about $3,400. So this little starter operation should make a significant amount of money. It's got an internal rate of return, Paul, at a gold price of 2,500 US dollars an ounce of 78%. Now, I'm used to seeing IRRs, internal rates of return of sort of 20, 25% would be a really good one. 78% is off the chart. And if you run the numbers at the current gold price, 3,400 or so, the internal rate of return is about 140%. So currently at $2,500, which was the base case, there's a 10-month payback on that capex. At the current gold price, it's a 6 or 7-month payback. So it should be a very, very profitable starter operation. As I said, that's not the main prize here. The main prize is actually growing the global resource here and tackling the hard rock material and growing the global resource base to around about 2.5 million ounces. As I said, I think it'll be a lot larger, but that second step will be a much larger operation. They'll probably be doing at least 10,000 tons a day, a similar size to what's happening next door to us.
Given the proximity of Tocantinzinho, was the consideration to basically try and ship material to them for toll processing? Was that not a viable option, or was that not attractive?
No, we haven't contemplated that. That may be a viable option in the future at some point for the hard rock material. But look, I mean, we have to do what's right for our company and our shareholders. We think the best way to grow value here and deliver results to our shareholders is by pursuing an initial starter operation on our project. It is true that there is a lot of very, very high grade material at Cuiú Cuiú. I quoted you some of the drill results and some of the results from boulders. So that is another important difference between us and Tocantinzinho is that we have so much more of this high grade material there. But look, our objective here in the short term, Paul, is to build this starter operation at Cuiú Cuiú. It's only a 12-month build. We hope to be making a construction decision subject to having the financing in place. And as I said, that is a major focus for us, just getting that financing in place here in the next few months. But we hope to be making a construction decision before year end. It's a 12-month build. So with a bit of luck, we'll be producing gold by the end of next year.
Okay, so you've got to raise $38 million. What's your ideal financing package? If you could pick and choose, what would you pick and choose?
Yeah, I would like to fund it all via debt. So obviously, the capex is 38 million, but it's a 12-month build. So we're going to need some money just to keep the lights on and pay people through the construction period. So ideally, I'd like to raise $45 million of debt. Obviously, it'll have an interest rate on it. That would be our ideal scenario. Now, a lot of institutions and groups that consider these types of loans, these types of sizes of loans, also, want you to go and raise some equity. As I said, one of the reasons we're doing this is to avoid dilution. So we're looking at other ways of, perhaps a little bit of equity alongside the debt. But I believe that based on the discussions we've had so far, the bulk of the financing will come from debt. Perhaps not all of it, but the bulk of it should be debt.
Now, you're the founder, as you mentioned, Alan, and you've invested several times into the company. How many shares do you own, and what's your sort of average price for those?
Paul, I haven't got the number to hand. I probably own around about 10 million shares myself. I've put in about 2 million Canadian dollars of my own money, which for me is a lot of money. The average price, I'd have to calculate it because I suspect it's probably in the order of 15 to 20 cents, that kind of range. But look, I think it's important here. There's a lot of CEOs that you've probably interviewed in your time doing these podcasts that will say, I have 10 million shares of the company and all the rest of it. But a lot of people have acquired those shares for sort of like pennies, right? And so, when the company was set up. So I believe that, I don't want anybody to contemplate investing in this company unless I'm leading by example. I feel very strongly about that. So yeah, I've got 2 million reasons why I'm going to make this a success. I'm very proud of the team that we've got. I'm very proud of the resource that we've been able to build, and I'm very proud of the results that we're getting back with the PFS. I got back from Brazil a couple of days ago. We've got 80 people on site, 3 rigs running, so we're generating lots of drill results. But I do think that one of the major catalysts here in the next 2 or 3 months will be hopefully securing the project financing.
Now, in terms of the potential lenders, Brazil's actually quite active on lending for mining projects, so you don't necessarily need to go to a European or North American bank. Who do you want? Who's your ideal lender? Is it best for you to have a local lender, giving Brazil more bites of the cherry, so to speak?
It doesn't really matter. Obviously, somebody who's maybe not necessarily a lender that's Brazil based or a Brazilian bank, but somebody that knows the Brazil environment in terms of understands the permitting process, et cetera, that would be the ideal lender. Somebody that understands the business and is keen to get things done. Look, Brazil is a very interesting country. It's a very large country. Paul, it's somewhere I've been working for 20 years. It's an exciting place to work. The geological potential of Brazil is enormous. It's a major iron ore producer, a major producer of bauxite that goes to make aluminum. It's a major producer of things like copper. And it has a very large skilled workforce here. So it's an exciting place to be. You can work in Brazil, unlike many other jurisdictions, 12 months of the year. And some of the world's largest mining companies are active in Brazil. Kinross's largest gold mine is in Brazil. You've got Vale there, you've got Rio Tinto, BHP, you've got Equinox Gold, you've got London Mining. The list goes on and on and on. So it's a very rewarding place to be. And I think the authorities are very supportive, and as I said, you can get a lot done here. There's a very, very skilled workforce, so long history of mining.
Absolutely. Now, your last raise, I believe, was in May when you raised 14.9 million Canadian. Who was that with? Was that with existing shareholders? Did you bring in some new shareholders?
Yeah, it was a bit of both. It was brokered by Paradigm out of Toronto. Those guys did a fantastic job for us. And it was mainly an institutional raise, and it was a mix of existing institutional shareholders and a number of new groups too. Eric Sprott participated in that raise, so very happy to have Eric as a shareholder. But there was a number of institutions, so all good, well-known names in our industry. So look, we're building our shareholder base. We're growing our company, and we've got a plan to get into production here in the short term.
Okay, let's. You said you hope to close the financing by the end of the year. Let's assume that happens. What are the next steps from there? You said you've got a 12-month build. When do you anticipate first production, being able to see first production?
Yeah, depending on when we make a construction decision, it is kind of dependent, Paul, on when we secure the financing. So we're talking to several groups here. We're a long way down the road with several groups. It's a bit of a process. I would hope to declare commercial production in the fourth quarter of next year. It's only a 12-month build. I mean, it's actually, because this material is soft and free digging, doesn't need to be blasted or drilled, or more importantly, it doesn't need big crushing and grinding mills to mill this stuff. The actual, what that means is the build cost is relatively low, certainly for that sort of tonnage, and the time to build it is relatively fast too. So essentially we're digging this material out using excavators. We're trucking it less than a kilometer. We're passing it through a sizer just to make sure there's no big blocks in there that are sitting in the mud. We add cement, pellets go up the conveyor, and then it goes onto a heap. And then a solution is passed through that heap, and then the gold is recovered through an electro-winning plant on the other end of it. It's very, very simple. And so we've already ordered a number of long lead items like the processing plant and a number of other items. We're doing detailed engineering on it too, and we're building out the team. It's a very exciting time for our shareholders.
And who are you going to use to build it, or are you going to very much try to sort of own and manage that?
We're going to do it in conjunction with Ausenco. As you know, Ausenco is one of the largest engineering firms, and then we'll do it with a number of local contractors. So we'll have our own team, our owner's team, if you like, plus a lot of oversight and input from the Ausenco guys. They have a very large office in Brazil. So, and as I said, we've got a construction manager called Luis Solaro. Luis has done this several times in the past, and so we're very confident that we can build this.
Okay, let's look at what comes after that. Assuming you hit commercial production at the end of next year, you said the money that this initial mining phase will generate, you're going to put that back into exploration of your district where you've got 50 targets. What will be? Do you have an exploration plan in place for how you're going to use that cash flow, or is that something that's going to be determined a little bit later on?
No, we have it in place, Paul, so we know exactly where we want to drill and explore. So, look, I just want to stress here, the exploration program is ongoing as we speak. We have 3 rigs turning. Now, once we're in production, I'd like to have 10 or 12 rigs turning. I don't have that capacity financially to explore that aggressively right now, but once we have cash flow from the starter operation, we should be able to get more aggressive. And I think you have. In all likelihood, we won't need to spend $50 million per year. So that may lead to other opportunities in the future. We want to grow this company. We've got a very unusual project. It is district scale, and there are just so many different targets here where we've got very high grade gold values. Not just high grade. There are some lower grade values too, which are very exciting too. So yeah, that's the plan.
We've covered a lot of ground in this conversation, Alan. So as we draw to a close, maybe we can just recap on what will be some of the key catalysts for the company over the next 12 months or so.
Yeah, exploration drill results, Paul. Ongoing drill results, I think, from the areas that we're drilling now. I hope that we'll get some good results over the next few weeks and months. Obviously, securing construction financing, hopefully again in the next 2 or 3 months. Making a construction decision by year end, and then there'll be constant news flow as the project evolves. And I think looking a bit further ahead into the medium term, so sort of 12 months out, 12 to 18 months out, probably we're going to be updating the global resource base, which is largely this hard rock material. And as I said, once we've pushed that up to sort of 2.5 million ounce range, we'll probably be then proceeding with a PA or a PFS on stage 2. So a lot of news here, lots and lots of potential catalysts over the next weeks and months.
We like having lots of catalysts in the future. That's it for this episode of Investment Trends. Cabral Gold, a reminder, trades on the TSXV under the ticker CBR and on the OTCQB in the US under the ticker CBGZF. Alan Carter, many thanks for joining us today.
Thank you, Paul.
And of course, to our viewers, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.